What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So yesterday there was another YouTube issue and I couldn't post this video, so I wanted to fix it up and touch it up and post this video today. It's kind of a shame because I really want to try to start posting 7 videos a week, actually almost every day. I'm going to try to pull this off. At least I'm going to do 5 videos. But this is a dividend stock. Again, I have a balance with my dividend portfolio. High income dividend stocks, high dividend growth stocks, and I like having both. There's strategies that I can have with stocks like this to buy more shares for my dividend growth stocks while I'm making high income and reinvesting my dividends. Already one of my stocks yesterday, I had enough dividend income from my M1 Finance dividend portfolio for one high income stock that I actually bought 0.9 shares of Flowers Foods. So the strategy is starting to work, especially since I'm putting more money and allocating my resources towards my M1 Finance dividend portfolio. So what I'm going to have to do, I really have to think about this week or so, is how I'm going to allocate my resources to M1 Finance, and how I'm going to allocate my resources to E-Trade, and how I'm going to allocate a small amount of resources to crypto. And they have a bad reputation right now. I would not throw all my portfolio into crypto. You're crazy if you do that, and it's not a good idea. That's why you can't have all your eggs in one basket. So the thing is, these guys take a hit, that's fine. My dividend growth stocks that have strong stability, like Starbucks and others, they'll be fine. So it's good to have a balance. And then I need to start putting money into Fundrise. And by the way, my affiliate link, if you sign up to Fundrise, we both get $50 worth of shares. So this special, there's only one left. So you're the last one. This is your time. So I'm going to go over these guys. This is what I like about them. You guys referred me to this stock. I like it. I love it. And I'm buying more. I'm going to have up to 100 shares. This is going to help me with my dividend investing strategy. And these guys are starting to make a comeback with their dividend growth. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. And let's check this stock out right now. And here's Owl Rock Capital Corp. ORCC is a symbol. And ouch, started right before the pandemic, and they were starting to make some noise right there, 15, 16, 17s, and ouch, down to 1336. So they're not rebounding well against the S&P. So their dividend yield is 9.88%, a PE ratio of 11.73, average volume 2.53 million, market cap 5.26 billion US dollars. Its year range is 1018 to 1533. Day range is 1331 to 1348, and its previous close was 1328. So as I review these guys, I'm going to tell you why I like them. Let's check this out. They're a leading business development company focused on lending to private middle market companies. Owl Rock Capital Corporation is a specialty finance company and business development company focused on direct lending solutions to U.S. middle market companies. We seek to generate earned income and, to a lesser extent, capital appreciation by targeting investment opportunities with favorable risk-adjusted returns and equity-related instruments. Our investment strategy is intended to generate favorable returns across credit cycles with an emphasis on preserving capital. We intend to pay a quarterly dividend, and shareholders can learn more about our dividend history here. I'll go over that shortly, but we need to know the nitty and gritty about these guys because business development companies, they're a huge risk. You don't know what you're doing. Look at Prospect Capital. I don't like those guys. I'll have to do another remix of these guys. Now, these guys are a different story. So let's go over their portfolio. So here's their portfolio. It's well diversified across the industry and geography. So in the South, it's 35%. In the West, it's 20%. Northeast, it's 19%. Midwest is 19%. International, it's 7%. So here's their portfolio by industry. 13% is internet software and services, 10% is financial, 9% is insurance, 7% is in food and beverage, 6% is manufacturing. Already, I like the diversification. 5% is healthcare technology. By the way, at the end of this video, check in the top left-hand corner on Horizon. That's a business development company that I just purchased, and I explained to you why I bought that. So make sure you hit that notification bell after you subscribe. Healthcare providers and services, 4%. Distribution, 4%. Consumer products, 4%. Healthcare equipment and services, 4%. Buildings and real estate, 4%. Professional services, 3%. Business services, 3%. Aerospace and defense, I like that as well, with the diversification, 3%. Investment funds and vehicles, 2%. And the rest of the portfolio in 12 under industries is 19%. So they're well diversified. They're strong right here. 19% other industries. I like that as well. They're so well diversified. This is why I was sold on these guys. And this is why I have them in my M1 Finance dividend portfolio. I just added them. So I have these guys allocated in one of my sections with the income section. I have it at a small percent. So I just put money in like just about every week. I'm going to have to strategize that with my dividend portfolio because I want to put money in growth and I also want to do income stocks. So these guys are incorporated. They're not in the main pie, but I'm still just going to put money in dollar cost average, possibly each month, and get to 100 to 200 plus shares or maybe even more. And I'm going to show you the revenue and dividend history, which attracted me even more. So studying the revenue, this is in millions US dollars. 2016, it was 28.8. 2017, it was 159, huge jump. 2018, 388. 2019, 718. 2020, 803. And then 2021, 1021. These guys did very strong during the pandemic, and their revenue has increased. This is a business development company. I always check their revenue and their trends because, remember, 90% of what they make as a BDC has to come back to us as investors. The same thing with the real estate investment trust. So I can't, go out there and afford real estate right now. I mean, I'm in graduate school. My head's spinning around. I'm lucky I can get, 7 to 8 hours of sleep sometimes, even on my days off. So parking my money in these guys and watching these guys grow as a company is phenomenal. And again, they're down. Now, some people say don't chase yields, but sometimes I do chase yields as long as I do my due diligence and my research. Now, check out their dividend history. So check out their dividend history. These guys started to really start distributing their dividends in 2019. These guys are a new kid on the block, but their revenue has done very well. You can see during the pandemic / recession, they were hit hard, and guess what? They did a little bit of a dividend cut, but they're catching back up to where they were, which was attractive. So let's check it out. 2019, 31 cents. 2020, 39 cents. And then in 2021, they're 39 cents to 31 cents. And then they went down. You see this little dividend here. I'll go over that in a second. So their payout ratio is 92%. You're going to see that as a business development company. Those have high payout ratios. The number of dividend increases in the last 5 years is 4. I'm going to go over a little bit more. Dividend growth in 5 years is minus 3.92. Big deal, because I'm going to explain to you why I'm buying these guys. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. So the annual yield, if you bought one share, you made 124 with a 9.28% dividend yield. But the new news of these guys, the company's current quarterly dividend raise is 33 cents per share, was increased by 2 cents from 31 cents per share in conjunction with its earning announcement. In addition to the regular quarterly dividend, the company's board of directors expects to also declare, when applicable, a formula-based quarterly supplemental dividend in amount to be determined each quarter. They also have a series of 6 special dividends payable to shareholders, which is nice, and they have it on their table below. So I'm not going to rely on the special dividends. I'm going to rely on their dividend growth and how these guys do as a company. So their dividend growth is going to be a little bit slower because they're high yielders. But again, the rules of a business development company, 90% of what they make go back to investors. So if you enjoyed this video, Make sure you subscribe and hit the notification bell so you don't miss future videos. I love posting videos for you guys. You guys have done amazing. We're almost at 11,000 subscribers, which is phenomenal. So I continue to post videos. These videos are free for you guys. All I ask you to do is subscribe, hit that notification bell, and check my channel every day. You guys take care and have a great Saturday.